Having a business can complicate a divorce because you're often looking at a situation where the business owner is perhaps paying household expenses using business resources. And in that instance, it's hard to determine what exactly the marital lifestyle is, what the true cash flow of the business is, and what the true income of the owner is. So when we have a case that has those attributes, a lot of times we'll have to hire a forensic accountant to help us dig into the financials and recreate those aspects of the party's lifestyle for us. That can be done to calculate a marital lifestyle, the value of the business itself, and what an appropriate income from the owner would be given the circumstances. So if you have a business that's an asset, in order to get a value that can be distributed in divorce, you have to have it evaluated. And in that instance, we hire a forensic accountant. They'll review all the books and records, and using their own accounting principles, will determine a value that's subject to distribution. So a lot of people think that if they have a business and they're getting divorced, that they actually have to divide the business up. And generally that's not true. What happens is the forensic accountant will look at the books and records, using established formulas, create a value and assign a dollar amount to the business. In New Jersey, a non-working spouse is typically entitled to a less than 50% interest in the business, and that is paid out to that spouse by way of cash payments that can be done in a lump sum or paid out over time. Sometimes businesses don't really have a lot of value, or the value is mainly in the equipment, and in that instance, the equipment would be valued, and again, an interest would be determined, and then a cash payment would be made to the non-owner spouse. So the way a prenup can benefit a business owner is you can exclude the business from equitable distribution. You could limit how the business is impacted by the divorce by saying that it's not able to be distributed, or that you could say the income is defined by a certain set of parameters, that the party's lifestyle is fixed by a certain set of parameters. So a prenup really can kind of set the terms and conditions under which that business can be evaluated or distributed. So when our forensic accountants review a business and do evaluation, the liabilities of the business are taken into consideration when determining the overall value. So it's similar to determining equity in a house, where you have the value of the house and the mortgage balance, and the difference between those two figures is the equity. A business is similar to that. The debt is analyzed and then incorporated into the analysis, and the resultant number that you get that shows the value includes that debt figure. So a non-owner spouse is not going to be independently liable for debt of the business. And if their name happens to appear on any of that debt, or there's any personal guarantees as a non-owner spouse, then the business owner would have to ensure that that person's name was removed from the liabilities. If you have any questions about business ownership and divorce, give us a call at Smedley Law Group, and we'll be happy to have that conversation.